Hello traders, this is Rich from tradesight. This is a look at our market-leading ETFs via our proprietary scans for the coming week. This is going to be for the week of Monday, January 27th, 2014. Got a very aggressive downside day going. We're definitely going to see that reflected in the scans here. Right now, the majors, the broad market ETFs, we've got downside CPS conditions in all of them. We've got volume bumps in all of them, and the open-close deviations are pretty substantial. The mid-caps IWM, the small cap IWM is a full 2% below the day's open. So that's a pretty substantial move from the day's open, and we did open with a gap. Let's move on and take a look at the individual domestic sectors. The sell condition looks about the same. It's not fully universal, but it's almost as close as you can get. No buy. You can see the complete absence of buy indications, and everything stacked up with downside CPSs. We've got quite a bit of volume bumps here, but let's move through some of the bigger movers. The TAN, which is generally volatile anyway, is more than 4% below the day's open. XLI, more than 2% below the day's open, and so is the IBB that tracks the internets. Most of these have downside CPS conditions and are all worthy of keeping track of for Monday. Here's a look at the commodities. Commodities are definitely negative. Commodities are, for the most part, getting hit today, even though there's oftentimes a flight to quality in gold. We're really not seeing it in a very pronounced way on this move because of the strength in the dollar. Right now, the UNG is the only thing that's showing upside because of the cold weather in the East Coast. That's driving up the natural gas prices, but everything else is fairly sloppy. The bonds are also are fairly firm. They've already had a very big run, so essentially they're just basically just holding up here. TLT does have a volume bump. Moving on to the foreign names, mostly downside CPS conditions. The EEM is very, very weak and on very big volume. That's been a lot of the focus. Japan very weak, and the FXI is also very, very weak and sporting volume bumps. Onto the specials. This is where a lot of times you see the institutions trying to hedge some things, and we're certainly seeing it. The longs are all indicated to the downside here on volume, and most of the shorts are indicated to the upside. So certainly the institutions are used. Sometimes they use these leveraged instruments, as a quick way to hedge against a move that's already underway, so they don't have to actually liquidate positions. Oftentimes they'll use this as a derivative hedge. So let's move on and take a look at the individual bar counts and see where we stand. All right, folks. Here's a look at the watch list. You can see that we definitely have some pretty good movement today. You can see from the percent changes that these things are really moving. You can see the TAN down 7%, IBB's down more than 3%. Look at the majors here. The spiders are down 2%. Small caps down 2.5%. Big movement. We don't really have any real protection to the downside yet. In most of these, the OIH is 10 days down in the seeker, so we could be getting close, perhaps next week to getting a buy point, but it's really without any real support here. The only thing that's even close is the XLU is 12 bars down on the buy side of the aggressive seeker. But as far as support from the bar counts, just coming off of a range high like this, there's not going to be much. The other thing to keep in mind, though, is if we do turn back to the upside, there's a lot of things that are on deck with some sells. XLI and XLF are both 10 days up, so if we do retest and start to go back up, we could see those print as well. The diamonds are 11 days up in the aggressive count. That's the IWM, and the mid caps, the MDY, are 11 days up in the aggressive seeker. So if we do start to head back up and retest, we're probably going to have some problems there with these bar counts. So definitely something to be aware of. All right, folks, as always, thanks for listening. Have a good weekend, and we'll see you next week. This has been Rich for tradesight.